It was an apparently normal morning over the Pacific. Dozens of massive cargo ships sailed slowly under the rising sun, their holds filled with the promise of a new American harvest. Millions of tons of soybeans destined to feed China's industrial heart. But then, in the stillness of the crossing, a signal cut through the ocean air, a devastating silent order: cancel all U.S. soybean shipments effective immediately. Within minutes, the world of global trade took a blow no one saw coming. More than 2.4 million tons of American hope were crushed in a matter of hours. Entire ships, loaded to the brim, were left adrift at sea with no destination port. The cargo, representing months of labor, thousands of rural jobs, and over $1.1 billion in contracts, vanished as if it had never existed. In Singapore, Shanghai, New York, trading terminals lit up with red alerts. Major U.S. exporters like Cargill, ADM, and Bunge received the news that would change their year, and perhaps their future. China had cut them out of the game, without warning. This wasn't just a shipping delay, it wasn't a renegotiation, it was a perfectly orchestrated, surgical, brutal blow. "40 ships already en route were forced to reroute. The international market collapsed within hours. Brazil, quiet and prepared, absorbed the void. 2.4 million tons redirected south in a move so fast it seemed rehearsed. Bloomberg was the first to report it. This isn't just a cancellation, it's a restructuring of power. The Pentagon issued an internal warning. When your main customer can cut you off mid-delivery without flinching, you're not in a trade war, you're in a stress test. And today, America cracked. In the Midwest fields, where soybeans aren't just a crop but a way of life, the impact was immediate. Soy prices at the Chicago Board of Trade plunged 8.2% in just 2 days. More than $470 million in market value evaporated within 1 week. This isn't a trade dispute, it's economic isolation. And as grain silos filled with unsellable soybeans, a bitter truth settled in. This wasn't an accident. It was a strategic maneuver. China hadn't just stopped buying, it had built its escape route. For years it had quietly invested billions in Brazil's agricultural infrastructure, new ports, rail corridors, grain terminals. When the blow landed, their alternative supply chain was ready. In 2025, for the first time in modern history, America's agricultural engine stalled, and the world barely blinked. The big question was no longer how much had been lost, but what would come next. Because if 2.4 million tons could vanish overnight, what would happen when the next blow targeted other industries, or the dollar itself? The invisible blow didn't just strand ships. It stranded dreams, shattered certainties, and forever changed the rules of global trade. And it was just the first move on a much bigger chessboard, one where growing the crop is no longer enough. Now, you have to survive. The shockwave didn't end at sea. It slammed straight into the heart of the American economy, and Wall Street was the first to bleed. On April 2, 2025, traders watched in disbelief as soybean futures nosedived, dropping 8.2% in just 2 trading days. It was the sharpest single drop in agricultural commodities since the market crash of 2020. The $470 million that vanished from the soybean market wasn't just numbers on a screen. It was months of planting, harvesting, and investment gone. Farmers across 11 Midwestern states saw their future incomes collapse almost overnight. The USDA's April soybean report confirmed the worst domestic inventories skyrocketed 13%, reaching their highest April levels since 2019. Silos overflowed with crops no one wanted to buy. In places like Iowa, Missouri, and Nebraska, once the proud breadbasket of the world, anxiety turned into anger. Farmers like Matt Dunn put it simply, "We've been shut out mid-season and there's no plan B." But the farms weren't the only casualties. Wall Street didn't just see red numbers, it saw the total fragility of the American agricultural economy, exposed for the entire world to see. Investment firms began issuing emergency advisories. Commodities funds hemorrhaged value. Agricultural lenders in the Midwest braced for a wave of bankruptcies as farmers faced a terrifying new reality. No buyers, no backup, no bailout in sight. It wasn't just about soybeans anymore. It was about trust, shattered. It was about a system, revealed as vulnerable. And it was about the ripple effect. A tremor shaking everything from small-town banks to corporate food giants. Even the Pentagon took note. Internal reports warned that agricultural insecurity could become a new strategic weakness, one ripe for exploitation by rivals. And amidst it all, Brazil celebrated quietly. Having absorbed China's soybean demand, Brazilian farmers and exporters saw their futures brightening as America's darkened. In just 1 week, the global agricultural power map began to redraw itself, and the world realized the United States, the land that once fed the planet, was suddenly struggling to feed its own economy. The collapse wasn't just financial, it was psychological. It shattered the illusion that U.S. agriculture was untouchable, and the aftershocks are only beginning to spread. Because if the mighty American soybean could fall this hard, what industry will collapse next? This was never about soybeans. It wasn't just a spontaneous retaliation, it was a cold, calculated plan, years in the making. While Washington focused on tariffs and short-term political victories, Beijing played the long game. As early as 2020, China began pouring billions of dollars into Brazil's agricultural infrastructure. New ports, new railways, new grain terminals, all built with a single strategic purpose to break the United States' grip on global food supply chains. According to reports from Reuters and Bloomberg, China's state-owned development banks financed over $11.2 billion in agricultural logistics. The Ferrogrão Railway slashing transport times by 42% from Mato Grosso, and expansions of ports in Santos and Itaqui, designed to ship grain at a volume that could rival U.S. Gulf Coast exports. By 2024, Brazil wasn't just another option for China. It had become the backup plan fully activated, a plan designed to replace the U.S., not just compete with it. When China canceled 2.4 million tons of U.S. soybean orders in 2025, it wasn't a panic move, it wasn't anger, it was execution. A silent signal to the world, we no longer need American agriculture. Even more alarming, Bloomberg Intelligence estimates that by the end of 2025, Brazil alone will be capable of supplying 70% of China's annual soybean needs without a single bushel from from the United States. It gets even deeper. Under the BRICS economic agreements, China secured fewer GMO restrictions on Brazilian crops, lower environmental standards for imports, and stronger bilateral trade protections, insulating them from U.S. political pressure. In short, China didn't just build new supply chains, it rewired the global agricultural order, and the United States barely noticed, until it was too late. Agriculture was just the first move on the chessboard, because if China could dismantle a $14 billion soybean trade in 72 hours without suffering any shortages, what comes next? This wasn't a trade war response, it was a controlled demolition of American agricultural dominance, and it may only be the beginning. They sank the soybean industry in a matter of hours. They rerouted billions in trade without hesitation. They exposed vulnerabilities that America itself had long refused to acknowledge. And now, a question echoes through every boardroom, every farm, every trading floor. If China could do this with soybeans, what happens when they target something even bigger? Because soybeans, in the end, are just crops. They are vital, yes, but they are replaceable. Corn, wheat, pork, these too can be shifted, redirected, sourced elsewhere. But what about when the focus turns to strategic sectors that aren't so easily substituted? What happens when the next blow lands not on farms, but on the factories, on the chip foundries, on the financial arteries of the United States itself? Already, behind the scenes, quiet tremors are growing. In early 2025, U.S. corn exports to China fell 29% year over year. At the same time, China signed massive multi-year corn supply contracts with Brazil and Argentina, effectively insulating themselves from future American leverage. Wheat and sorghum, once secondary exports, are now slipping into the same strategic void. But the real nightmare scenario doesn't end with food, it moves into technology. Semiconductors, critical to every smartphone, every vehicle, every missile system, are beginning to shift into the crosshairs. Chinese companies have intensified investments in domestic chip manufacturing, while quietly slashing orders from US-based suppliers. What was once slow, cautious decoupling has now accelerated into deliberate strategic severance. And looming even larger is the financial weapon no one dares speak of aloud: the US dollar itself, the currency that powers global trade, the reserve asset that underpins American economic dominance. What if, just as they abandoned American soybeans, China, and perhaps others, began reducing their exposure to U.S. debt, to treasury bonds, to the dollar? A chilling report from HSBC's Commodities Outlook in April 2025 revealed that China has already renewed or expanded long-term trade contracts with Argentina, Brazil, Russia, and Pakistan, covering over 70% of its grain and oilseed needs. In parallel, their purchases of U.S. agricultural products fell 26% in just the first quarter of 2025, cutting over $3.2 billion from U.S. export flows. At first, Washington dismissed these moves as posturing, bargaining tactics ahead of negotiations. But when those same patterns began repeating across multiple sectors, electronics, metals, energy, it became harder to deny the reality. China wasn't just diversifying, it was disconnecting. And if they can disconnect from food, from technology, from the dollar, what would America's position in the world really look like? Perhaps what we witnessed with soybeans was never about agriculture, perhaps it was a stress test, a proof of concept, a rehearsal for something much larger, much deeper. A full-scale economic strike without a single shot fired. Imagine a scenario where American farms, factories, and markets all feel the squeeze at once, where Wall Street watches capital flight accelerate, where small-town America faces not just falling commodity prices but widespread bankruptcies, job losses, and political destabilization. Where U.S. influence over global trade rules crumbles as new alliances, built on different currencies, different standards, different power centers, rise to take its place. Is that future inevitable? No, but the blueprint is becoming increasingly visible. And if soybeans were the first fuse, the next targets could ignite an explosion far harder to contain. Because this wasn't just an agricultural dispute, it wasn't just trade tension, it was a message. A message written not with tweets or tariffs, but with supply chains and contracts, with ports and railroads, with cold, patient, methodical strategy. The world saw it, America felt it, and now the clock is ticking. Are we witnessing the rehearsal for a full economic confrontation against the United States? A silent war waged through grain, through chips, through currencies? If so, the soybean collapse of 2025 will be remembered not as the end of an era, but as the beginning of something far more profound and far more dangerous. And the real battle has barely